you the freedom to begin to invest in other real estate businesses, whether it be a mortgage company, a title company, a property management company. The sky's the limit in this industry. Today, we're going to interview somebody who has done exactly that. And they're going to walk us through step by step how they built to massive production, which has opened the door to all kinds of additional businesses. This episode is one that you're absolutely not going to want to miss. The big question is this: how do those of us in the real estate industry with crazy amounts of ambition, how do we think bigger than the building of our own empires? How do we simultaneously seek success and significance, income and impact? My name is Justin Stoddard, and this is the Think Bigger Real Estate Show. Welcome back, guys, to this episode. It's going to be one that you will not forget, because at the end of this episode, you are going to be thinking bigger. There's no way around it. I'm excited to introduce today's guest. His name's Andrew Franklin. He's with the Franklin team out of the Houston, Texas market. A little background on him before I allow him to really dive in is that, in fact, let's just say it. Andrew, thank you for being here on the show today.
Yeah, glad to be here, man. That intro, you've had a lot of big hitters on here, so I'm honored to be on here with you.
Well, thank you. You're right behind him, my friend. So for those that don't know Andrew, I heard him speak on stage at a big real estate conference, and I was like, I like that guy. I like him a lot. I want to get to know him. So Andrew, again, such a pleasure. For those that don't know you, obviously you've been one of the top teams at EXP globally, right? Every year since joining the company. In 2021, you guys sold 1,665 homes. Last year, just under 1,500. Almost $600 million in volume this past year. You're the founder of multiple different successful ancillary real estate businesses, which is what we're going to get into today, including Envision Title, Eagle Point Lending, Encore Acquisitions, Apollo Property Solutions. And prior to that, which I think is super interesting, is that your background is that you were an M&A investment banker on Wall Street, which kind of gives you that concept of why stop with one business, why not go on to multiple. Again, excited to dig into this. Thanks for being here, my friend.
Yeah, glad to be here and glad to share.
Let's so talk to us about how long were you working on Wall Street, and maybe what impact did that have upon the way you approach the real estate business?
Yeah, so I come from a real estate family. My dad started our sales business. This is our 41st year. And so I graduated college in 2008, where, it was a tough time to be in real estate, tough time to be in finance as well. But I had made a decision probably in 2005, 2006. I had a lot of fraternity brothers going to Wall Street, particularly doing M&A, investment banking, or some form of investment banking. And my dad always encouraged me to do something other than real estate. He didn't graduate from college, and I went to a pretty good school on the East Coast. And so I never had planned to do real estate. So my goal was to make as much money as I could early, and I didn't care how much I was working. And so investment banking fit both of those bills. I think I was doing about 100 hours a week, and luckily as a 22-year-old, I was making six figures, but it was, in San Francisco. So I didn't really have much to show for it except really good experience and start to really learn how to be a professional, learn how to have a work ethic in the adult world, and then really learn how businesses operated. We were selling companies that were, selling for 100 to 250 million. So still very entrepreneurial, still owned by the founder in most scenarios, but still big businesses making a lot of money. So it helped me a lot. It helped me understand financial statements and a P&L and all that good stuff, and how to grow businesses with people and systems. So did that for about 6 years. Moved to our New York City office at the same firm, and then I eventually wanted to get back to Texas, so switched to another investment bank and worked for about a year in Dallas.
So talk to me about how that impacted you. Again, when most people get into the real estate industry, they think about selling one house at a time, right? And obviously you came in with the big business mentality. How has that shifted, or how has that shaped the way that you approach the real estate business?
Yeah, I mean, I think what I got I had a couple advantages. One, my dad already had a pretty successful real estate business, but it was very relationship focused, not necessarily driven by systems or a P&L. He was a top team in the area for a number of years. So I had that advantage that we did have a base. I didn't start from scratch. But I saw these smaller, family-run businesses doing investment banking where these people would scale them and scale them in certain ways, usually, like I said, by people and systems. And so I saw what was possible in other industries, and I had that base from my dad. So I was able to take a lot what I learned on the M&A side and then take my dad's real estate business and implement a lot of the stuff that he may have not been doing the most efficient or at scale. He was still going to listing appointments when we bought the business, doing 400 to 500 deals a year. And so I did a lot of stuff that maybe he didn't really have the desire to do as far as people and systems, and I can talk about that. But I started as an agent. So I was doing leases and buyers and then listings. And then probably 3-4 years into it, I was churning a lot of production on myself. So I got a lot of that experience, but I knew that wasn't the end goal for me. So I ended up leveraging myself out pretty quickly after those first 3 or 4 years, because I didn't want to be the one going on 6, 7, 8 listing appointments a week for my career, which is pretty much what I was doing for the first couple.
I think you probably had maybe flashbacks to your days on Wall Street, right? Where it's like, okay, I'm working a lot, right? That's those appointments just to get the deal, and then obviously all the work that happens after the fact. And interesting how you then decided to grow a different kind of business, right? As opposed to just being out in production, you then decided, okay, how do I actually scale a business? Now, this topic is near and dear to my heart because what you shared with me in our prior conversation is very much aligned with what I call the upstream model, right? The upstream model is essentially this: is that you can go kind of direct to consumer, go out and try and like cultivate a big database of people, knowing you're going to get some small percentage of people that come to the table as clients or referrals from clients. Or you can go find interesting people who are just upstream from a real estate transaction, who know that a lot of real estate transactions are coming because it's in their day-to-day work. And that one or two relationships can send you a lot of business. Talk us through kind of how you have scaled up to now, right? Selling, 1,500, 1,600 homes in a year. Like, who is your upstream partner that makes that all possible?
Yeah, and Justin, you hit the nail on the head. I think we do a lot of things poorly, but that one thing you just mentioned that you wrote a book about is what we do pretty well. And so my dad in the late 90s started creating relationships with home builders because of that exact sort of thesis you just mentioned, right? Where they saw a lot of sellers and buyers, people that wanted to buy their new home, but maybe did not have a realtor at the time. And so he created networking and relationships and some programs where we could get those referrals. And we have people to this day, salespeople that are still in the business back those days, 20 plus years ago, that still send us business. We have some salespeople that send us, 10, 15 plus deals every single year. They might have a different W-2 from a different 1099 from a different builder, but a lot of them stay in the industry. And so we've built these programs around getting those referrals because at least in our market, a lot of people start shopping for a new home before they think about what they're going to do with their existing home, because they want to figure out what neighborhood they move to or what floor plan. And so a lot of times those builder salespeople see these sellers because they're buying new construction and then they're going to sell. They see these sellers and buyers before they've even thought about calling a realtor. And so we go directly to that source and build relationships and make their lives easier, help them sell more homes with our programs, so that they'll refer us when that client says, hey, okay, I want to buy your new house, but I need to sell my existing house first. Do you know anyone? And so that's 60% of our business to this day is those builder relationships.
Interesting. Now, the people who you're building relationships with, is it just the agent that's in the model home that you're walking in and saying, how can I make your life easier? How can I bring you more clients? and in return, you'll send clients back my way? Or is it higher up the kind of the food chain within that company?
So at scale, you need to get approval by the like VP of sales or division president in the market, because they will, the way to get in with the builder is for one of those middle management, local, regional managers, allow you to come to a sales meeting and talk in front of those salespeople. They're not agents in our market. I know in certain markets, I know you have listeners all over. They might have licenses, not in Texas. Most builder salespeople in Texas do not have licenses. And if they do, a lot of the big production builders make them put it inactive. So we're not dealing with realtors typically, but builder salespeople that work for the builder. So we get in with the division president, VP of sales, tell them how we can make their life easier. Basically help them sell more homes, eliminate contingencies, give another tool to their salespeople. And then we are able to talk about these programs to the salespeople at a sales meeting. And then we go and build those relationships one-on-one, because you have to do both. You can definitely get approval from the management team to call on the salespeople. But if you then don't go build the relationships with the individual salespeople, the referral will never take place. But to get them at bulk, you need to go manager and then salespeople. You can do it the other way, go salespeople first, but it's hard to get a lot at one time that way.
I love it. Anytime you're thinking this model, right? It's who's the one or two relationships who will have the biggest impact upon my business, and then how do I add? And I love. I mean, it's just textbook from what I teach, which is oftentimes agents will go into these relationships, whether it be an estate attorney or whether it be a builder or whatever, and they'll come in with a friendly way with their handout, right? Which is, hey, I'm never too busy for your referrals. Here's my cards. Please refer me. Instead, what I hear you doing, which is the only way that I've found it to work at scale or work at all, really sustainably, is to come in like seriously looking for how you can solve their problems. What is it that they're trying to accomplish, and how can you help them to do that easier, faster, better, a better experience for them and for their clients? And when you come in with that mentality, it's amazing how many doors quickly start to open that were before seemingly shut.
Yeah, I mean, you hit the nail on the head, Justin. You can go so far by building really good relationships, asking for referrals. Like if someone really likes you, you can get referrals that way. But if you're solving their problem or giving them value, yes, the relationship has to be there. But if you're solving a problem for them, it doesn't have to be your best friend on the other side, because you're making their life easier. And what we're doing is we're helping them sell more homes. And yes, if you go relationship and value, it's a game changer. But value first is way more important. And then, you build a relationship as well. But if you just go with the relationship, hey, send me referrals because we're friends, you're just not going to capture as many deals.
Yeah. Boy, I love that you said that. We're going to create all kinds of additional social media content on top of that, training materials for my people, because what you said right there, Andrew, is so true. Is that in this industry, we're accustomed to have the leading value proposition of let's be friends, right? And it works when it's with your friends and neighbors and community members. But if you're looking to scale a real estate business, you have to go B2B, in my opinion, right? You really have to go to talking to other business owners, and it's not about friendship anymore. Yes, you need to be friendly, but there's a difference between friendly and leading with value proposition of friendship. Friendship can come later if you're doing great business together and you're really helping each other out. That will come. Awesome. Great. It's an added benefit. But at the core, it has to be, how can I help you do more business? How can I help you do better business? When you come with that mentality, it's amazing what changes.
Yeah.
Let's talk a little bit about once you do this right? And I love the fact that even coming to this conversation, I wasn't fully aware of how much you guys had embraced this model of scaling a warm market business by just finding the right people to refer you. Once you do that, right? Let's kind of pivot our conversation now to not just building a real estate business, but building ancillary real estate businesses, which I think, again, is where a lot of people don't see. Again, I do a lot of work with agents, helping them set strategic goals. And oftentimes it stops of what does me and my family need to take care of us right now? And what I hear you doing is you're actually creating businesses that are going to take care of you long after you're done selling homes, and even generations into the future, right? You're really building an empire, which we see on the board right behind you, right? Subtly, you're telling us that it's much more than just building good production, right? Talk to us about kind of how you started taking your first couple steps towards building businesses in the real estate industry?
The realtor has access to the consumer in a lot of cases. And so just think of how many times we refer somebody or we are the ones choosing a vendor. It's a countless amount of times. I mean, today alone, I'm not even in production and I've already referred our title company today to another person. I've referred an insurance company and another client I've referred an inspector, and I'm not even in the day-to-day production. And so it's 120 local right now, and I've already referred multiple people because I had the relationship with these consumers or agents. One of them was a hard money lending client of mine that was going to close on my title company. And so keeping that in mind, that piece in mind, is that if you have the relationships and you have the production and the transactions, why not be like all these other massive companies out there that take 123 Smith Street and they have 3 or 4 revenue streams on 123 Smith Street transaction? And so for me personally, my dad had ownership in a title company. He was very passive. He had ownership in the whole, but then he would send business, whether or not, to make it legal in Texas, you can't get paid for the business you send. You own a piece of the whole, and then you send business to the whole. Whether or not you send business that month or not, you own the whole. So I saw a little bit of that. I think my dad, was controlling at that time about 15 deals a month. He was sending to the title company, maybe making 70, 80 grand, very passive. He didn't see the P&L. He didn't deal with the hiring. He just sent his business. He was going to send it anyway. And so I saw that early on when I started to be an agent for my dad's team before we bought that business. And so I really started learning that. And then what happened was we started growing the business when we took over. And so those 15 deals a month turned to 20, and then 25, and then 30. And that title company kept selling us more and more shares as we grew. And I started being really curious and started shopping that deal. Like, hey, because my dad, the agreement we had was my dad was going to keep the 70. Anything on top of that, either we got more shares or we did our own thing, would be ours, me and my sister. And so I started shopping that deal, trying to find better deals, just a better split for the deals we sent. And everyone I talked to was like, okay, you're big enough where you should do your own thing if you want to make more money. And I didn't know what I didn't know, didn't realize how hard it was, but I also didn't realize how profitable it was as well. And so I ended up starting my own title company. It's been about 5 years. The hardest 6 months I've ever done, but probably the best thing I've ever done as well. And so once I had my own title company, got licensed with Texas Department of Insurance and did all that, I realized how profitable 123 Smith Street could be if I did it on other ancillaries, because I saw what it was doing in title, which, I think year 3, I was about to make more money than I did in our sales business, just running title. And so with that, I sort of got the bug and the addiction. And I like to say I'm more of an entrepreneur, and the vehicle happens to be real estate than I am a real estate guy. And so once I did title, then I started doing these other things. Hard money lending was next. And then I saw what my clients were making on some of their real estate investing deals. So I started a real estate investing business, and then I owned a bunch of rentals, so I needed a property management business. So it was always a need for the growth that I had, and I controlled the business, right? I had some piece of it where I controlled the business or the knowledge. My hard money lending business taught me a lot about what the flippers were doing and the buy and hold guys were doing. So then I created one myself. So a lot of knowledge, a lot of putting myself in rooms of people already doing what I wanted to do, and then being a copycat. I tell people I'm a very good copycat, do a lot of R&D, rip off and duplicate.
Let me ask you a question, because I think sometimes the entrepreneurial bug can turn into a bit of a virus and it can cause issues, right? Where you become jack of all trades, master of none. How did you prevent that to where all of a sudden you start a title company and your feeder business, right? Kind of the bread and butter real estate business doesn't start to go in the tank. Like, was it sequential, or kind of walk us through how one that maybe has a big vision like you did and do about building multiple businesses, how do they keep from messing up the previous businesses when they start the next one?
You have to have an integrator. I was on a Zoom earlier presenting to a group, and so anyone that hears me multiple times on stage or a Zoom, I say the same things. But read the book Rocket Fuel by Gino Wickman. He talks about a visionary and integrator, and so every business I created had an integrator, and I was the visionary of that business. And so a lot of the day-to-day work was not being done by me. I was casting the vision, and I knew how it was going to work, but I wasn't the one spending 40 hours a week or more getting it off the ground. So I think that's extremely important, is that I was able to spend a couple hours a week in those businesses, starting them and growing them and casting the vision. But I wasn't the one hiring. I wasn't the one doing the sales. I wasn't the one doing the operations. That's the only way to do it if you want to be married and have kids and see those kids. And I mean, in my 20s, I was the guy that was just gonna, just work more hours. That's just not sustainable. And it's not only not sustainable, it doesn't work well, right? Like, you need someone to help. If you're a big visionary like me, you need someone to help execute on that plan. And if you're the V and the I, the visionary and integrator, and you leave the first business, then things are going to suffer, right? And so I was able to leave those other businesses because I had very good integrators in the first business.
So in each business, you have an integrator. You're the visionary, but you've got integrators in each business. Probably not one integrator for multiple. Is that accurate? Like, your org chart looks like you've got you as the visionary of these different companies, and then you've got an integrator selected for each enterprise.
Okay. Yeah, I have a president of our sales business. I have a different president for the Franklin team, and then my hard money lending business. My partner is more the integrator, and then my partner in the real estate investing business is the integrator that spends most of the time. So yeah, of those 6 businesses, I think I have 5 different integrators, and one is an integrator in both.
Do you typically share equity, or is it salary, or what's the layout that keeps that integrator really interested and loyal?
So some I have some equity, some I have just high salary and bonus, and then a percentage of profits, which is just like equity. So every one of those businesses, the integrator has some compensation to profit. Mm-hmm. So whether it be ownership or just a percentage of profit.
Yeah. So good. So good. I love it. I think, again, you're helping me to think bigger, helping a lot of people to think bigger. So I really appreciate what you're sharing here. Any kind of added insight? In fact, I think it was you on stage. You had mentioned a couple books, the EOS. It's the book. I'm actually reading it right now. I should know. Attraction. Yeah. That one. And then I didn't realize that Rocket Fuel was also authored by the same author, or written by the same author. So that's great. That's actually next on my list with my integrator, who's my right arm. She's amazing. And so yeah, we're going to be reading those. So I appreciate that. In fact, and then our private coaching clients are going to be, we're going to be rolling that out to them as well as we kind of build systems around implementing that. So super cool. Andrew, this has been so enlightening. I want to ask one more question before I get to our final question. Obviously, you step into these upstream partnerships because it all begins, most real estate agents, they never get to the point of having the space in their calendar to go think bigger and create these additional flows, because the first revenue source takes them so much time, right? They're just so busy with all of this stuff to create an income that they don't actually create the space to go actually build an empire. What was a key value proposition? Again, we kind of talked about leading with value to these builder clients. It can be as specific or as generic as you want, but what's you mentioned something about the tools that you offered to help them sell more. Anything that you're willing to share would be really insightful, I think, for the audience.
Yeah, so we have two programs in one, and any competitor in our market knows what we do already. So we've been doing it for a long time and talk about it. So basically, it's two programs in one where we go and say, and this one was created in the 90s. My dad went to these home builders and basically said, hey, this time there's not a lot of people that have equity in their houses back then. The market wasn't what it is today. And so he said, but you're going to end up putting a realtor on the new home contract anyway. I think in Houston, people put realtors on new home contracts like 80 to 90% of the time. So home builders just expect to pay the realtor. And so my dad went to these home builders and said, put me on the contract. He has a relationship with them at this time. Put me on the new home contract, refer me that client, and I'll sell their house at a discount or for free. You're already going to be putting someone on the contract. Why not put me? I'm going to help them save money, which if they end up saving more money and they sell their house, they're going to be able to buy yours because I'm going to do it at a discount or for free. And so it's a win for you. They're going to get an extra 3% of equity because I'm going to, instead of 6%, it's going to be 3%. But you're going to pay me on the new house. So I'll get paid that way and I'll sell their house for free or at a discount. So that's what our builder program started with. And then a number of years later, it ended up, so not rocket science, but it worked really well. And most people in our market have some form of that now. We call that our free listing program. But then what put us really over the top is a number of years later, a builder came to us and said, hey, the free listing is working great, but I want you to guarantee the sale if the house doesn't sell. We have someone in Dallas doing a home buyout program, and we want you to do it for our clients. And at that time, my dad, this was 2000, my dad just started to be a successful agent after 15 years, just started to have a little bit of money and got through very challenging markets and was super scared about doing that. Didn't want to buy a bunch of houses, couldn't buy a ton at a time back then, but figured out a way to offer that program. And so that's what we do to this day, where we sell their house at a discount if we get paid on the new house, and then we guarantee the sale. If the house doesn't sell, we'll buy it from the client. So the client has a guarantee, the builder has a guarantee and an eliminate of a contingency. And then it also helps the salespeople sell more homes, because someone walks into the model home and says, I want to buy your house, but I'm worried about my home selling. And this is the solution. Hey, we have the Franklin team over here that will sell it at a discount and offer a buyout. And so we get a ton of leads. I mean, right now the leads have definitely picked up, but we're probably getting 10 to 15 leads a week from home builders that are doing those two programs.
Man, really, really interesting, right? And then that's probably what maybe spurred on the need for property management, right? Because now you guys are holding some of those properties, right? That you purchased, probably like, hey, we could keep this as a rental, or do you flip them in most cases?
Most of the ones that we would have to buy, we would end up just selling them, because we only have to buy them if the house doesn't sell. So right. What we're trying to do, and so the ones we don't sell are ones that typically we're going to take a loss on. Because the market changed or the appraisal we got was high at the time and the market didn't justify that price. So on the rental side came in a couple years ago, and that is totally different. We're buying houses at a discount off market. And so the ones we have to buy with the buyout, we get rid of and take our loss and move on to the next one typically.
Yeah. Super interesting. I love this conversation. Final question is this, Andrew, is that you're a big thinker. What do you do to continue to be a big thinker, to continue to expand your possibilities? What does that look like for you?
It's this, man. It's meeting people like you. It's listening to podcasts. I have on my daily actions, read 30 minutes a day. It doesn't sound like that much, but when I always told myself I was going to do that, I'd go a week without reading, but now I have to put an X before every bedtime if I do it or don't do it. And so everything I've created has been from a podcast or a mastermind or a book. It wasn't my own knowledge. And so I've noticed that. And so I'm constantly in a thirst for new knowledge. Man, I'm going to start listening to your podcast. And so I'm constantly doing that kind of stuff where I could learn something. And I told someone earlier today, like if I go to a conference, I might be there for 3 days and I might get an hour of value, but that hour of value usually is something that's huge. Like I might listen to 2 hours of podcast and it might be 5 or 10 minutes of value. But if you're paying attention, you'll get that value and it'll be an exponential return if you're listening and putting yourselves in the right rooms. So to me, that's it for me.
Man, I love it. One of the things that we help our private clients do is actually create what you just described there, which is we call the Think Bigger operating system, which is we identify what are the key activities that you need to reach your biggest potential that you do on a daily basis with an accompanying check mark box, just like you described. We have visibility and they have visibility. It's amazing. But when you put up a scoreboard, how we all perform at higher levels. And then when you know someone else is looking at the scoreboard, what happens? You go to extreme efforts that you normally wouldn't do otherwise. And those extreme efforts, which are really not difficult, they're not complicated, right? They're small things, like you said, big gates, big doors swing on small hinges. And it's those little tiny activities and practices that make all the difference. Fun to hear that that's how you got there. That's how we're committed to helping other people get there as well. So fun, Andrew, having this conversation with you. Thank you so much for pouring into us, for opening up the playbook to say, guys, this is how we're selling 1,600 homes a year, right? This is what it looks like. Such an abundant mindset, absolutely golden. I'm excited to stay in contact with you and see what else we can continue to do together. And it's been so fun. Thank you again for your time.
Likewise. Thanks, Justin. Enjoyed it.
Everybody listening here today, my final request is this. First and foremost, go join the Think Bigger Real Estate group on Facebook, where we continue to go deeper on these principles. And then lastly, it's this: go think bigger. Andrew, thanks for helping us do that today, my friend.
Sounds good, buddy.
Be honest, hearing good ideas is not enough. You have to apply them in order to get the results desired. If you found value in today's episode, then you're really going to love the community of big thinkers and high achievers that we are building in order to help you to apply the principles taught today. If you're not yet a member of Think Bigger Real Estate on Facebook, go sign